Commanders' new stadium in DC. What are the latest updates on the deal? What does it mean for taxpayers? Here's what we know. On August 1st, the DC Council voted 9-3 to advance legislation offering substantial tax abatements and revenue-sharing arrangements tied to the redevelopment of the former RFK Stadium site. The bill would authorize a long-term lease agreement and redevelopment agreement between DC and Pro Football LLC, the owners of the Washington Commanders. Mayor Muriel Bowser praised the council's first vote, calling it a step towards replacing a, quote, crumbling sea of asphalt along the Anacostia River with a, quote, state-of-the-art Super Bowl-ready stadium. Now, to finance the project, the bill authorizes the issuance of up to $675 million in bonds, $500 million of which would be designated for horizontal infrastructure improvements and stadium capital costs, and $175 million of which would be used for parking facilities. That's according to a fiscal impact statement from the district's CFO. Washington, D.C. would receive $112 million in parking tax revenue, $54 million in sales tax from merchandise sold in the stadium, and $248 million in food and beverage sales taxes, among other financial returns. The legislation would establish the Stadium District Entertainment Area and would require the developer to enter into a community benefits agreement, under which it would invest at least $50 million over 30 years in local job creation, youth education, and community access. The second and final vote is expected September 17th, according to the council. For Tax Notes, I'm Kennedy Wahrmund. We'll be sharing the latest tax-related news, so follow us for more.